more on this, let's bring in our big money co-host, Taylor Riggs. Steve Moore, committed to Unleash Prosperity and host of More Money on WABC Radio. And North Dakota Senator Kevin Cramer, a longtime stock market expert. Thanks to all of you for coming back on. We appreciate it. Let me talk to the person in the building who probably understands the market best, and that is the great Taylor Riggs. Taylor, by the way, I don't think we're going to have a rate cut this year. That's just my view, but I think the markets are still pricing it wrong. But what's interesting is open market rates. The bond is up to, the 10-year is up to 440. Yes. That's a lot. And then you've got commodities booming, CRB, gold booming, oil, West Texas 85, but Brent almost 90 bucks. So you've got inflationary signs flirting around. What do you make of it? And
a decent economy as well. And I love the report from Jerry when she talks about the cross asset, the yield story, because usually when you have an equity market sell off, you think flight to quality, flight to safe havens, buy treasuries, bond yields fall. But today was the exact opposite. Yields are rising because it is all about those rate cuts. Or maybe not rate cuts like we've been talking about. So the Fed's Loretta Mester came out and she said a huge risk, of course, is cutting rates too soon because it could restoke some of those big inflationary measures that are underway that you hinted at. So I still think inflation's a big issue.
Kevin Warsh said it rather well on the show last week. Too much Fed yapping. Okay. Do we need Ms. Mester to tell us, A, what the futures market's saying? The futures market, by the way, has been wrong for the last 600 years on this subject, if not others. I mean, it is what it is. B, we don't want to act too soon. But C, there's three rates. Really? Was there any value added from what she said? I don't know if she said it on CNBC today or wherever she said it. Really?
So Jay Powell was asked this question on Friday, and it was Good Friday, and the markets were closed. They said, are you too transparent? And he said, I don't think so. They like coming out and doing all these talks, but I think you're right. Sometimes it can be confusing. I will say, though, what is good about this Fed speak is the markets came into this year asking, begging for 6 rate cuts. And at least now, finally, they're looking at 2.5 rate cuts. So they're getting more in line with what the Fed has consistently said. I've never seen a half a rate cut. What's a half a rate cut?
You got to help me on that. Kevin Cramer, you may not know what half a rate cut is, but you know something about oil coming up there from North Dakota. We're seeing a pretty big rally, the best since December, I think, or even further back, October. West Texas, yes. Brent crude, yes. What do you make of that? What's going on here?
Well, what's happening, it's really, it gets to the point of what's making this inflation so sticky. Energy prices, high energy prices, will add to the inflation of everything we grow, produce, manufacture, move from one place to another place, whether you're receiving it or whether you're sending it to another market. And what's happening is this is the direct result of bad public policy. The Federal Reserve cannot fix bad energy policy. So you're seeing a growing demand around the world. You're seeing a shrinking supply, even though the United States, by the way, as you probably noticed, had a record production month. But Larry, at that, it's still probably 2, 3, 4 million below what it should be or what it could be, which would bring prices down by increasing the supply, meeting the global market demand. But that wouldn't fit into the everybody should have an electric vehicle in their garage routine that this administration stuck with. So it'll always be confusing as long as this guy's the president.
Steve Moore, you got an electric vehicle in your garage?
Well, I'm going to have to get one because they have a tow truck and take away our gas cars under these policies. But by the way, Kevin Cramer is one of my favorite senators, so it's an honor to be on with you, Senator. Look, I just don't see any signs of falling inflation right now, Larry. I mean, you went through, gold prices up, oil prices up, commodity prices are up, Bitcoin is up. I mean, all the alternatives to the dollar are showing rises in value. So I just do not see a case for falling inflation. I wish I did, but I think we're looking at 4 to 5% inflation now, at least for the rest of the year, and that may be too low. I mean, my gosh, look at what happened to the CRB index just in the last 24 hours. It went up substantially. When you have higher commodity prices, Kevin Cramer is right. That means that's going to filter right into consumer prices. So somebody show me the case for lower inflation. Where is it, Larry?
Well, the question is going to be, gentlemen, I'll stay with you just for a moment and come back to Taylor. Senator Cramer, for example, I would argue with the oil prices going up and commodity going up and interest rates going up, et cetera, any rate cutting by the Fed will be perceived as a deliberate effort, intent to juice the economy to re-elect Joe Biden. And Kevin Cramer, I think that would redound that kind of thinking or that kind of charge or even that kind of appearance, Senator Cramer, would really be very damaging to the Federal Reserve, and that's a reason why they really shouldn't do it unless there's a clear-cut case to lower rates, which there isn't, as Steve Moore and we've all agreed there's no clear-cut case. So, Senator Cramer, the Fed be digging its own grave here if they start moving.
The Fed's objectivity is already under some scrutiny for good reasons. There's been a lot of questions about just, how independent the Fed really is. And remember, Fed chairmen are always a little different just before they're reappointed than after they've been reappointed. And I have to say, all in all, I think Jay Powell's done a pretty good job of trying to create this soft landing. I just think he's going to come up short. But you're exactly right. The worst outcome for the Federal Reserve would be to be perceived, because that perception can become reality, as tilting the scales in favor of one side or the other in this next election. So that's going to, that's an additional factor in for their consideration.
Taylor, two questions, though, important questions, I think. One is, I had an instinct today when I looked at the computer screen that these commodity runs might have had something to do with the tragedy of the Baltimore Bridge and the freighter. But then again, the trend line started way before that. So I don't think that explains it. And the other thing is the yield curve is still inverted. I mean, the Fed funds rate and the T-bill rate, I'll call it 5.5%, more or less, 5.25, 5.5. And the 10 years at 440. Gee whiz, that's a long time for a yield curve inversion. Does that have any meaning at all?
You're getting me very excited talking about the yield curve, Larry. So watch out. I will say that the inverted yield curve, typically the 2s, 10s that from the Federal Reserve, is something that they use not as a sign that there is a recession, but more of a predictor, though, as you know, it works at a lag. So it inverts, and then typically 6, 12, 18 months later, it is a sign that there is a recession. But you could also note that you get a recession because the Fed has been too late in cutting rates. That's why it's inverted. So I don't know. I hear from market participants that 2s, 10s inversion becomes less and less helpful the longer we go on. I think there's some structural issues with this economy that are different, which is the reason that traditional signal is not working this time.
I always prefer the 3-month bill to the 10, but whatever.
Well, now you sound like Jay Powell.
Well, that's the New York Fed model, which, by the way, worked for about 50 or 60 years, but it hasn't worked this time. But the other thing is the Atlanta Fed's GDP tracker model is up to 2.8% for the first quarter. That's almost 3%. That's not nothing. I mean, it sure ain't a recession.
And Loretta Mester repeated that today, that this is an economy that's being revised a little bit higher. I think this defies all the logic from all the economists out there, that the economy is healthier than we thought, maybe in part thanks to a consumer that isn't pulling back yet, despite all of these inflationary forces.
Steve Moore, I know you're a big fan of the EVs and the EV chargers. Joe Biden injected a fortune into these EV chargers, supposedly, in the misnamed Inflation Reduction Act, or whatever it's called. Right. So my question to you is, where are all these EV chargers?
Yeah, I think they've built a couple dozen of them with several $1 billion. And this is the question everybody in Washington: what happened to all that money? Where are the EV chargers? You joke with me about whether I bought my EV yet. It's very, the fascinating thing that's going on in the auto industry right now is nobody's buying EVs, Larry, despite the fact they're just showering this industry with money, and they're showering, they're saying you got to buy these things, and it's almost the more that Biden pushes them on consumers, the more people are saying, give me my old-fashioned gas car. It's pretty amazing that we have, oil demand around the world as high as it's ever been at a time when all that Biden has been talking about for the last 3 years is, we've got to stop, fossil fuel use. One other point, we've had this whole discussion on this show and so many shows about you know, whether the Fed will raise interest rates or not, the single most important thing Washington can do right now to help this economy, and I want Senator Cramer to listen to this because I know he's on my side on this, cut government spending.
Oh, that's
cut
way too easy.
Spending.
That's so
much
easy.
more important.
That's way too easy. I thought you had a more creative solution. Senator Cramer, Steve Moore was talking. I think Biden is now, each charger's got $1 billion. Cost us $1 billion. He put in $12 billion and he's only got 12 chargers. I mean, Senator Cramer, the model is broken. The EV model is broken.
It's very broken.
I'm going to give you the last word on that because you were very patient with us on the stock market.
No, this has been great, by the way. I'd rather do this than just about anything. The model is broken because even with big subsidies, only rich people can buy an electric vehicle. And that's not very many people. And they don't work with a hoot in places like North Dakota. And we don't have a grid that can, energize them. We don't have enough transmission. We don't have enough generation. We're closing all the efficient, power plants in the country. It's so upside down and so screwed up that Donald Trump can't get in the White House fast enough for my taste.
The whole story is back-assward, if you know what I mean. Senator Kevin Cramer, thank you. Steve Moore, thank you.